Okay. So yeah, this was a Your Stock Our Take, which came in from a commenter on YouTube. Finance LYK is their name. And they said, can you guys do an updated view on Mama, please? So yes, of course we can. Mama's Creations Inc., MAMA or Mama on the NASDAQ, like Ryan said, currently trading at a price of $9.21 with a market cap of about $344 million. And again, they manufacture and market fresh deli prepared foods, primarily in the United States. Things like beef, turkey meatballs, chicken, et cetera, et cetera. So the stock has really performed quite well since 2023, and this is generally due to commodity prices easing, leading to improved margins, as well as the company's new CEO, Adam Michaels, taking over in late 2022 from the then CEO Carl Wolf, who then rebranded the company and started cutting costs. So since early 2023, the stock is up over 400%, driven by that rebound and acceleration in the financial results. Now, looking longer term first at these financial results, we can see that revenue has had a positive trajectory and has grown since 2018 with a compound annual growth rate of about 25%. And operating income and net income have trended positively as well, with the exception of 2022 and 2023, when again margins were reduced with elevated beef and chicken prices. And that big jump up too that we're seeing in 2023 and 2024 in revenue was because of an acquisition, essentially, or I meaning 2023 in relation to 2022. Now, looking at the recent quarter of Q2 of 2025, revenue increased about 14% to 28.4 million. Gross margin was about 24%, down from 30% during the same period last year. And management noted the difference in gross margin was primarily attributable to significant commodity cost increases from historical averages, as well as non-recurring impact from construction surrounding the now completed installation of strategic CapEx projects, which management estimates negatively impacted corporate gross margins by approximately 500 basis points. And these CapEx investments included installing grills, doubling chicken capacity, and increasing labor efficiencies through reduced overtime. Now, adjusted EBITDA was positive 2.7 million, down about 9% from 3 million for the same period last year. And net income was a gain of 1.1 million or 3 cents per share compared to 1.7 million or 5 cents per share for the same period last year. Now, looking longer term, here is what the company's margins have looked like. And we can see here that there was that good rebound from the 2022 to 2023 lows. Despite margins being a little depressed recently due to investments and commodity prices, increasing again. Now, the company doesn't have a specific or formal guidance, but they do have some targets included, which include normalized gross margins are expected in the upper 20% range, with the potential to reach the low 30% range, driven by investments and operational improvements. Adjusted EBITDA is expected to be in the teens percent range over the medium to long term. And management says that they are committed to paying down debt using cash flow, which is obviously a good thing to hear. And let's look at that balance sheet here. So it does remain quite healthy with cash of 7.4 million and debt and leases of 8.6 million, providing a slight net debt position of 1.2 million. And the change in cash and cash equivalents was primarily driven by 3.5 million in capital investments and about 2 million of debt pay down. Now, looking at the valuation here, the stock currently trades at about 70 times trailing earnings, an enterprise value to adjusted EBITDA multiple of about 30 times, and about 36 times trailing cash flow. So keep in mind, margins were somewhat depressed over the past 12 months or more recently in the last couple of quarters. But again, the stock is not expressly cheap. And if we were to compare this to a peer like Armanino, hopefully I'm saying that, Armanino Foods of Distinction, AMNF on the OTC, which is about 2/3 the size of Mama's, and has grown at a slower pace with a revenue compound annual growth rate of about 9% from 2018 to 2023. But it trades with much more reasonable multiples of about 18 times trailing earnings, 12 times trailing cash flow. It also pays a dividend yield of about 2% and has a net cash position of over 20 million on its balance sheet. So very healthy there, the attractive fundamentals. So, although the growth is slower with Armanino, it is attractive comparatively, I would say. And as I show here as well, over the past 5 years, Mama has traded with a median price to earnings multiple of about 29 times, while Armanino has been trading at around 20 times. I think it's actually closer to 19 times, but around there. So you can see the discount. So to conclude, Mama's Creations is fundamentally attractive, I would say, and management indicates there is room for further growth and margin expansion. But the company is a price taker when it comes to inputs, including chicken and beef, which can negatively impact margins as we saw in 2022 and 2023. Now, the balance sheet remains healthy and is in a slight net debt position. And the company is investing to expand margins and capacity long term, which has hurt margins near term and led to valuation multiples higher than typical. But even in a normalized environment, the business has never been expressly cheap, in our opinion. So yeah, that's essentially my take on the company. Not a bad company, but it's just it is pricey, for what you're getting, in my opinion. And then here's just the disclosure. Keystone, our employees don't hold any in either the companies that I went over.
And it's an interesting company. They used to have an interesting CEO, and I think we've interviewed their CEO, who seems very competent.
Yep.
He seems like he knows what he's doing. I just think right now the valuations, it's been on quite the run. The valuations
Yep.
are there's not a margin for safety in there that
Exactly.
we'd see at all, and any misstep, and if the markets were to turn negative, I think this is a good company, but it's trading at premium valuations. And while it deserves some premium, likely not the premium that it's trading at right now.
Yeah, especially on like Brennan highlighted how they're price takers for the inputs.
Mm-hmm.
That can just destroy the business effectively overnight, out of their control. And we saw that recently. Obviously, the pandemic, you're not expecting another one of those anytime soon, hopefully. But if there is increased inflation pressure, with some people expecting that now, with like Ryan was going through with the Trump trade,
Yeah.
if that does happen, like that would hurt Mama to some degree. If, of course, food prices
Nobody
aren't
wants to
exactly
hurt
those
Mama,
tariff things, but yeah.
But exactly, and like that's kind of the thing, is it would be nice to have that margin of safety if you're paying a lower multiple to take on that risk of being a price taker. Again, not a bad business. I think that they've been executing well, and we'll continue to follow them.
For sure. All right, let's quickly move on to Brett's segment, Quest Resource, QRHC on the NASDAQ.